Hey everyone, we're going to be here today with another video talking about the costs associated with a refinance and whether it makes sense for you to. So now this is obviously always going to be person to person, and there are some exceptions. And sorry if you hear some barking, that's Neva the dog. She's upset that I didn't let her outside. But there's always going to be some exceptions. Sometimes you just need to get a refinance because you're getting divorced or you need to buy out the property or something. But in general, if you're looking to do a refinance just to save money, there's a couple things you want to take a look at. So I think that everybody knows this. There's going to be some fees that are going to be involved with it, and that's aside from like taxes and insurance and whatnot. To give you an idea, I just did a loan for somebody, and they got a real good deal. Altogether, their fees were between $2,000 and $3,000, which is actually not too bad, because that includes your appraisal. They actually brought down the rate a little bit because it doesn't always make sense, but this time it did. Some title work, all that good stuff. But what they did is they rolled that into what's called their equity, the amount of home that they own. And if you own a house, chances are you have more equity in it than you think right now, just because it's going up. So the reason I want to tell you about that is because sometimes you will get these mailers or other stuff from people, and you'll look at the offer, and you won't need to bring any money to closing, or maybe you'll even get money back. And you think this is a really, really good deal. I'm going to save 50 bucks a month, and I'm not going to have to do anything. That's great. But the problem with that is if there's, say, $6,000 worth of costs, because let's say this, like a big lender, sometimes they'll charge you 1% origination fee, then you got to pay for an appraisal, you got to pay for your title work, sometimes you got to pay what's called points to make your rate lower. So sometimes when you look at the total cost that you're paying to the lender, now when you get your documents, it's A, B, C, D, and E that you'd want to be looking at, and I can always help you if you need it. But you want to take a look at how much cost there is total involved in doing the loan. Because if you're going to be doing $5,000 worth of costs and you're only saving 50 bucks a month, I mean, that's going to take you about I'm not the best at math, but that's about 100 months to recoup, which is almost 10 years. Most people aren't going to stay in their loan that long. In the situation that I talked to you about, my clients, they had about, I think it was about $2,000, maybe $3,000 in total costs, but they were saving $200 a month. So essentially, they made their money back on the investment into their loan within a year. And they know they're going to be there for a while. They're actually taking a little bit of cash out to fix their floors. Now, that's another thing with refinancing. You can actually take equity out of your house and pay off credit card bills, fix something, start an emergency fund, college fund, I don't know. It's your equity, it's your money, but you can do that. And so that's a very cool option. Now, on top of actual fees, one thing you do want to look out for, one thing you are going to have to keep in mind is you're going to have to do what's called an escrow reestablishment, and that's your taxes and insurance. Basically, you're going to need to bring a certain amount of months' taxes and insurance to the table just to set up a new escrow account, and that can be rolled into your loan as well, so you don't even need to bring it. But then on top of that, you will receive that back as a refund. So that's one thing to keep in mind, but the biggest thing you want to look at is your costs. That's going to be like your origination fees, your appraisal fees, underwriting fees, processing fees, title work, all that good stuff. You want to take a look at the costs versus how much you're going to save, and then kind of do the math there, because you want to make sure that, if it takes you 6 years to recoup the costs on it, but you're going to sell the house in 3, you didn't really save money long term. You might have freed it up monthly, which could help some people, but you didn't save money. So those are some things that you want to keep in mind when you're looking at refinancing your home. So let me know if you have any other questions. I'd love to help you out.